I don't know what happened hapa.
Tutoa kwenye system wote.
Ilitoka kwenye system.
Kasoma session imeend.
Bana. Irene,
Yes, yes.
poleni kidogo hapa, naona ilitoka kwenye system iliotoa. Now,
Yes, it's so.
okay. So, as I was saying, trade finance traditionally kuna hizi product tatu mara nyingi au nne. We have documentary letter of credit, we have bank acceptance and standby letter of credit that provide transfer of risk from importer and exporter. Kwa hiyo benki hawezi kubeba hizo riski zote hapo for free. So all this facilitation, I mean bank kunakuwa na return ya kulipwa fee. I don't know the structure ya benki zenu. Irene, unaweza ukashare na sisi, how do you charge a trade finance product kama ushai kuenda kwenye hizo transaction, either by rate or ni percentage? It depend. Wewe unacharge
We check by percentage.
by percentage. Okay, fine. Kwa hiyo kuna topic itakayokuja pricing strategy. Kwa hiyo tutakuja kuiangalia vizuri hiyo ya percentage au hybrid whatever. Now and so while this product remains central to the trade business of the bank, the scope of trade offering, especially at global banks, is broadened. Okay, compared to zamani. Zamani hizo ndo traditional zilikuwepo. We had documentary trade credit, letter of credit, hiyo tunasema standby letter of credit na hiyo nyingine. Lakini for now, due to technological development, now everything has been broadened. Example, banks are offering purchases order financing and account receivable financing to clients trading on open accounts. However, tutaenda kuiangalia vizuri hiyo open account. What is it and how it's operate. So with advance in internet or technology-based, an increasing number of banks are offering electronic platform that combine service such as transaction initiation, document verification and preparation, purchase order management, and payments as a supplement to wider trade finance relationship. Kwa hiyo, what I'm trying to say here is that trade finance is growing. Trade finance is growing. Kwa hiyo, we need to be more innovative ili kuweza kufanya nini? To capture what is needed in that trade. So remember, tulikuwa tunazungumzia trade dilemma. Hatujazungumzia trade finance yenyewe. So the following are just a definition. What is trade finance, basically? So trade finance, this is just a term that used to describe the settlement arrangement available to buyers, ambao tuliwasema ni importers, and sellers, who is exporters, that are used to mitigate risk and ensure that all the term and condition of underlying commercial contract are met. Mfano, The exporter gets paid and the importer receives the goods or service. Goods or service both with minimal risk. Risk is there. Risk is everywhere. Kwa hiyo trade finance is just arrangement, settlement arrangement that is available kwa ajili ya buyer kumsaidia anaponunua apate bidhaa alizonunua as per contract or as per term and condition stipulated. The same applies to exporter. Exporter, he wants assurance to get paid. Alipo pesa yake baada ya kuuza whatever product he sell. Okay? Remember, at the same time, with minimal risk. Risk is there. Risk is everywhere. So, and according to International Chamber of Commerce, ICC 2024, they have updated the definition of trade finance. So, the trade finance is defined as a financial service facilitating the real economy, enabling business to finance, monetize, risk mitigation, and settle trade flow, thus supporting the movement of goods and all the performance of the service, regardless of the maturity, both internationally or domestically. Hawa ni walitoa definition yao. This is one of the reputable institution they call International Chamber of Commerce. Also, according to U.S. Department of Commerce, International Trade Administration, they define trade finance as a set of technical or financial instruments used to mitigate the risky inherent in international trade, so that to ensure payment to exporter while ensuring the delivery of goods and service. Ukiziangalia definition zote ya ICC, Chamber of Commerce na hii US Department of Commerce, zote zinatoa assurance to exporter kulipo pesa yake na importer kupata mzigo wake kama alivyouagiza. Maybe kama una swali kwenye hizi item tulizozipitia, you may pause or you may just unmute and raise your question ili tusikuache njiani, kwa sababu we need to go slowly, uelewe each item ili baadaye ukienda kwenye complex item it may be easy for you to navigate and comprehend the content. Cool. This is just more definition on that. They say the trade finance is a means to turn cross-border trade opportunity into real transaction by effectively managing the competing risk as well as inherent risk facing both the exporter and the importer. Kwa hiyo, sisi kama bank, this is an opportunity. Okay? Unaona kabisa both the exporter and the importer, they are in dilemma. They want assurance. And you are a trusted institution as a bank. Well, this is the opportunity. So what you need to do is just to convert the opportunity available in cross-border into real transaction by managing the risk that involved in trade or in international trade to both exporter and importer. So now you may be asking yourself, why does trade finance exist? Was Yusuf yupo? Yusuf?
Nipo mkuu.
Kwa nini trade finance mkuu? Why does trade finance exist? Kwa nini ina exist so far?
Nani ni kufacilitate yani trade na kuweza kumitigate riski.
Sawa. Very true. Very true. The reason why trade finance exists, the thing is to mitigate the risk. The risk iliyokuwepo ni kwamba exporter kutokulipwa pesa yake baada ya kuuza bidhaa zake. And risk nyingine ni kwamba importer kupokea bidhaa ambazo hakuzifanyia ordering, like zinaweza ikawa ziko defection, zinaweza ikawa so zile alizoziagiza in terms of quantity and quality. So trade finance exists to mitigate the risk. You say that global trade forms an integral part of the global economy. There is a number of risks that involved in conducting business across border. So the key to fulfilling a successful trade transaction is to understand it and mitigate all the risk, all associated risk. That is a reason, major reason. On the other hand, so according to the Trade Finance Global 2020, trade finance accounts for 3% of global trade that value some USD 3 trillion annually. Kwa hiyo unaweza kuangalia volume of transaction ambazo zinakuwa contributed na trade finance ina exist kwa sababu hii hapa, it's growing globally. Kwa hiyo kwa mwaka unaweza kuona hizo trilioni 3 USD dollar annually. Hii waliripoti Trade Finance Global 2020, but you may go and find out mwaka huu trade finance imecontribute kiasi gani kwenye global economy au global trade. Kwa hiyo 3% ni nyingi sana kwenye trade finance. Now, let's now move to how does trade finance work, operate. A typical trade finance will include the buyer, who known as importer, and the seller or exporter, and the banks of the buyers and seller. Kwa lazima kuwa na hizo party mbili, basically importer and exporter. Lakini huyu importer lazima awe na benki yake, exporter lazima awe na benki yake. We call it bank of exporter, bank of importer. So the buyers agree to acquire ownership of goods or benefits of the service or usage of the service and a contract of sale. Kwa lazima ili inapofanya kazi lazima uingie kwenye mkataba. Lazima kuwe na mkataba hapo. Contract between buyer and seller. Ambayo hapo kutakuwa na agreements to acquire ownership wa bidhaa. Kama wewe ni ulikuwa unanunua, you have to own the goods or services, or to benefit out of that service, or to use that service under certain contract. Then the seller agreed to make sale to an actual or potential buyer. Actual buyer, right? That time, or potential buyer ambayo we expect baada ya muda afanye nini, anunue bidhaa zetu for the product or service and a contract of sale. Okay, to an actual or potential buyer for product or service and a contract of sale. So banks can provide the funding. As I said earlier, benki iko kwa ajili ya kufacilitate transaction, kufacilitate biashara ya importer and exporter. It's just facilitating. Lakini when it is necessary, benki ina provide funding kwa kuwakopesha importer au exporter, lakini kunakuwa na product specific na kunakuwa na arrangement specifically ambazo zinaendana na hiyo. Lazima atapitia mteja akihitaji funding, lazima atapitia procedures zile zote za credit assessment. Lazima uangalie credit worthiness ya mteja, uangalie capacity yake ni ipi. So kwamba ni anadili na international trade, amekuja tu from nowhere, you just give him fund, no way. Lazima atafuata zile procedures zote za disbursement, credit disbursement, and the liquidity arrangement to help settle the contract of the sale. Hapa sasa unaweza ukaona kwamba sasa hawadeal importer na exporter directly wenyewe. Benki imewekea mkataba importer and exporter wana mkataba maalum ambayo inasema mtu huyu exporter afanye hiki na hiki na hiki. The same applies to exporter au importer. Lazima kuna ile stipulated terms zilizowekwa ambazo kila mtu atafanya. So all this allowing accessible financing along the entire physical supply chain to ensure exponential benefits to all entities involved in trade transaction. So let us see the risk ladder. Lazima tuangalie hapo. We say that bank ina facilitate transaction importer and exporter kwa kumitigate riski au kwa kuensure that the importer and exporter they're having minimal risk. So lazima kuwe na riski ladder, kwamba lazima tuangalie for more riskier to least riskier. So risk ladder is therefore an important tool to help buyer and seller determine the most appropriate form of settlement, depending upon client relationship, location of the party, goods or services that are involved, movement of funds and documents, and the option for settlement and financing. Kwa hiyo riski inatofautiana hapa sasa. Okay? Kwa buyer na seller. Kwa hiyo lazima huyu buyer au seller adetermine ipi inamfaa, form ipi ya settlement inamfaa. So bear in mind that maybe kwenye mitihani or whatever, you may be told to differentiate these two terms now. Method of settlement na method of payment. Okay? Method of payment na method of settlement. Tutakuja kuziona hapo mbele. What the difference between two? Kwa hiyo hii settlements, aina ya settlement ambayo atatumia seller au buyer itategemeana na riski appetite, riski iliyopo. Riski hizo zinaweza kadepend either by looking at the client relationship. What is the relationship between buyer and seller, between importer and exporter? What is their relationship? Kengine, location of the party. Location ya nini? Ya hawa trader, exporter and importer wanapotokea ni wapi? So from there you may determine now kwamba huyu riski yake ni kubwa au ndogo. And also another thing is aina gani ya bidhaa ambayo mnaenda kudili nayo or services that are involved. Pia movement of fund and documents also determine the risky. And also the option for settlement and financing may be determined by all these, what we are saying, the risk ladder. Okay. So as a relationship evolves or changes between both parties, more relaxed term of settlement may be agreed upon. Kwa hiyo wewe kama msimamizi au facilitator wa importer au exporter ndo utadetermine sasa kwamba methodi ipi au terms ipi ya settlement mtatumia nyinyi kulingana na riski level aliyonayo huyo mtu wako unaidili naye. And so let's now see the as we are I think we are on the same page kulingana kusema kwamba trade finance iko kwa ajili ya kutoa solution kwa ajili ya kumitigate risk. Okay? Sasa tuangalie types of trade finance solutions that are offered. We say that a broader set of trade solutions are available to companies around the globe internationally. They are all directed to satisfy the needs of risk mitigation, the need of settlement, the need of information, and the need of finance. All of these, they aim to mitigate risk, that is. So traditionally, trade finance provide two sets of solutions. And on your explanation, if you are told to explain trade finance solution, we have two sets of solutions traditionally. The first one, settlements and risk mitigation, driven by instruments which provide payment assurance of payment, and or trigger points for the payment itself. So these instruments satisfy the settlement and risk mitigation needed, or risk mitigation that needs by the company, that is needed by the company. Another one is finance-driven instruments, which primarily satisfy the financial needs of a company and also provide some risk mitigation coverage. So that is just a solution. However, you may find now some other trade finance solution ambazo zinatolewa. So let's now see the global trend. Trade global trend. So according to, we just refer back to some literature or journals that have been posted. According to 2024 Global Trade Outlook and statistic report by WTO, world mechanized trade volume is projected to grow by 2.6% in 2024 and 3.3% in 2025. It's growing now. It's moving upward. So the economies involved in global supply chain, it's helped to spread out the technology, know-how, and investment as well. So in order to help corporates to be part of the global supply chain and infrastructure development needed, that facilitate the growth. Banks and other financial institutions use variety of products to help in exchange of goods and services. The type of trade product offered address issues around a typical international cross-border sale and purchase of goods that include addressing foreign exchange and country risk issues, buyers and seller not knowing each other, as we have discussed earlier, overcoming local regulation, ensuring shipment and transportation issues, etc. Ensuring payment and issues. So in short, banks provide a financing option and payment assurance based on how payment will be settled amongst buyer and seller. So trade finance concept, we have seen the broader definition of trade finance. Let's now see the trade finance concept itself. As we have defined earlier, this is a set of techniques aimed at mitigating and transferring the trade risk to financial sector using bank funding to enable domestic, cross-border, and international trade flow. So basically, it focuses on supporting the physical flow of goods across borders, while primarily using the goods receivable and cash generated from trade as a principal security. Tofauti na huku kwingine kwenye traditional credit kwamba bank, they facilitate they just focus on supporting the physical flow of goods from exporter across all other border, while using the goods receivable. Zile bidhaa zinatumika kama nini? Collateral. Or rather, wanatumia cash generated after mauzo ya hizo bidhaa, then we use that cash generated from trade as a principal security, collateral security. Labda niulize swali la kawaida hapa. Between trade finance credit na traditional credit, which one is riskier and why? Wataalamu, Yusuf, can you suggest us?
Rudia kidogo tena.
Yaani swali liko hivi. Trade financing credit ambazo unakopesha lakini you rely on account receivable, goods, hizo receivable and cash generated from the trade, and traditional lending, hii unawatafuta wateja huko masokoni unawakopesha. Which one is more riskier? Or EP ina generate more, which one is safe compared to hizo?
Trade finance ni safe zaidi.
Sawa, hiyo ili kweli. Sasa kwa nini? Uliza watu wengi, they know nothing about trade finance. Hata exporter, importer, tumefeli wapi? Na kwa nini benki haziput much effort kwenye trade finance? What is the challenge? Madam Irene, can you tell us? Irene, upo?
Hapo nipo, nasema hapo Yusuf ndo mtaalamu kabisa.
Basi sasa tunaomba experience yako mtaalamu Yusuf, kwa
Okay, mimi
sababu
nachojua kwenye
nimejaribu kufanya research. Kuna baadhi ya benki hazitoi products za trade finance at all, na hiyo ndo safe trade financing if you compare kwa kukimbizana na wateja sokoni wakopeshe. Unahisi ni kwa sababu gani?
of course hiyo ni nzuri sana na ina challenge nyingi, manake hapo kwanza ile product yenyewe inakuwa kama security.
Okay.
Alafu jambo la pili lazima mtafute nini? Nani okay, kwanza kuwepo na godown na kuhifadhia hiyo bidhaa USF. Jambo la pili kuwepo inabidi mumtafute na manager ambaye atakuwa na manage ile godown na hizo transaction kwa jumla. Kwa ni zote na challenge zake nyingi tu.
Kwa wana opti kufocus na retail customer.
Yes.
Okay, fine. Japo tutafanya research zaidi afu tutakuja na majibu baada ya moduli hizi zote, then tutakubaliana vizuri. No problem. Now so typically involves at least 3 parties, as I said. Tuna exporter, tuna importer and financier. Kama mteja hafanyi hahitaji any funding, yeye anataka tu facilitation kwa kumpa hizo letter of credits, kwa kumguarantee whatever, huyu anabaki tu kuna kwa hizo party hapo mbili, I mean exporter, importer na bank. Lakini kama atahitaji funding, lazima kuwa na hizo basic 3 parties: exporter, importer and financier. Okay, so all these differ from other type of credit product. This transaction have the following feature. Utofauti wa credit ambayo inatolewa kwenye hizi trade finance product inatofautiana hizi zingine kwa kuangalia features zifuatazo. Sometimes wanaweza kukuuliza tu explain a feature of trade financing product in contrast to hizo traditional credit product. Ya kwanza, kwenye hizi transactions zinatofautiana kwa kuangalia underlying supply of product or service. Kama ulivyosema hapo, lazima tuwe na bidhaa fulani ambayo tuna rely upon. Okay? Account receivable hizo. Lakini pia lazima this credit financing kuwe na purchases and sales contract. Lazima kuwe na mkataba, agreement, agreeing on terms and conditions. That is secondly. Thirdly, lazima kuwe na shipping and delivery detail. Bidhaa ikiwa inakuwa delivered kupitia ship, lazima kuwe na details zake zote. Necessary detail. Sometimes there is some other documentation that is required to facilitate this transaction. Custom documents, whatever. Also, we have insurance cover. Insurance is very important item kwenye hii credit product. Terms and instrument of payment, method of payment, terms of payment and instrument of payment. That is it. And financing of goods or service in trade or transaction from supplier through to the end buyer. So financial instruments and products that are used by business to facilitate international trade and commerce financing of fluctuating working capital needs, which is self-liquidated through cash flow, of underlying transaction. Also, we have trade finance lending that is secured by the exported goods and future receivable or other dates instruments such as bill of exchange, etc. So we have also supply chain finance and exports and import finance. Hizi tutakuja kuziangalia separately kama mlivyoona pale mwanzoni, ni one of the topic ambayo ipo supply chain finance, how to deal with it. So let's now see the key driver of economic, key driver of economic development through flow of credit in supply chain. And so also WTO has reported that there is this estimation 80 to 90 of global trade, which was $10 trillion per year, is reliant on trade and supply chain. Kwa sababu gani sasa hapa tunajaribu kuonyesha essence ya supply chain kwenye trade. Okay? Supply chain ina hiyo contribution $10 trillion per year. Okay? So international trade, we call it, this is just a contractual exchange of goods and services for money between parties in two countries that may have different legal system, political, currency, and culture. Easy to share define kule mwanzo, this is just a repetition. Export and import of goods is the oldest and least risky form of international trade. Least risk form of international trade ni hizo hapo. So to the exporter, you have the risk of non-payment by the importer. To the importer, you have the risk that the exporter may not ship the goods if it will be zaidi kule mwanzo. With the trade finance, commercial bank act as the intermediary to ensure the exporter gets paid when importer receives the imported goods. So introduce a third part to transaction and in the process, remove the payment risk and supply. Third part tunayomzungumzia hapa ni bank. Nyinyi mabank. Benki nyinyi ndo third party ambapo mna remove payment risk na supply risk. Provide the exporter with receivable payment according to the agreement and may also extend an importer credit to fulfill the trade order. So the one mwanzoni nikauliza different from conventional financing or credit issuance. Conventional financing ni hiyo ya kwenda kutafuta wateja wengine huko. Conventional financing is used to manage solvency or liquidity. That is simple. But trade financing, it's focused on mitigating international trade unique inherent risky, which is currency fluctuation, political instability, creditworthiness of involved parties, etc. So now let's see the key feature of trade finance as opposed to conventional finance include, of which hizi hapa, I think just a repetition za mwanzo pale. Let's move to trade finance ecosystem. Trade finance ecosystem. Hakikisheni hizi tunazifahamu vizuri, hizi features za trade finance if you compare to conventional financing. Zote hizi za msingi sana kuziangalia. So tuangalie now trade finance ecosystem. As we said that trade finance is essential in the economy, is an indispensable oil that facilitates trade. Without trade finance, international trade is not going to work properly. So we need to have a trade finance.